All right, everybody, let's just quickly go over the markets. We'll go over some daily charts and maybe some hourly charts as well. So let's take a look at the ES. Trend is down. Support is 58.66. It was broken when price went to 58.45. It broke 58.66. What is the response? There is no response. So looking at a target of going to 56.71 and then 55.50 easily. These are very practical swing targets that price can go to. And that's what I'm looking at. If there's no response here, that is telling me the price is going to go lower. And the only thing that could change that is if Monday you have a whole lot of volume come in and go right back up. But until I see that, the lower targets are in play. When the market rallied, it pulled back already to the 50% level, so the pullbacks are complete. Very important, pullbacks are complete, right? So next we'll take a look at crude. Trend is up, support is 72.80, and it's already breaking out. Target at 79.54 and then 82.16. So looking at those targets, there might be a pullback, and we'll see if that happens. Pullback level below 71.85. You have these two resistance points and the strong volume at around 69.85. Strong volume level there. All right. Next, let's go to gold. Trend looked like it turned down, but I think it might be going back up, right? So you had this move down, and you had these two pullbacks, and over here the buying activity came in, right? So you had a rally down to 25.66, a pullback back up to 27.48 and 27.61. After that, an attempt to break the lows, which the buyers are not supporting, and the volume has been coming in. As you can see right here, they're coming in, and this low is not making a volume low. So, and already it broke. The volume is telling you that a new high is coming. If you look here, the volume already made a new high. See that? The volume making a new high. So volume making a new high, chances are price is going to follow. And it's showing technical strength because as price pulls back, the volume is holding. See that? That's indication of technical strength. And now it's making a new high, projecting the price itself will also make a new high. All right, next is Bitcoin. Bitcoin is just going sideways, forming some type of base. They pulled back 1, pulled back 2, pulled back 3, and trend is up. These are the support levels. It's testing them here and here. Pullback level halfway back is about 84,635, and below that we have a strong level at 78,103, around 78,100. All right, next is Euro. We have a rally down and a pullback. Rallies down to 1.026, pullback occurred already to 1.047. Now price is hitting this low. Volume is confirming. Actually, volume told you that this thing was going to break down. I think either here or here. Here was the last place in this bar that it told you was going to take out this low. The volume telling you here, which is in this bar, that I'm making a new low. That's what happened. Is price responding? It's not. It's nothing yet. Nothing yet. All right. Next is copper. So the trend is down, but these highs are being broken. And volume also turned right here. There's money coming in. Right? This red, bang, right here. So that's a pretty good sign. It might be pulling back because it took out this high, and look, there's some selling coming in. There's selling coming in. As price broke 4.34 and went to 4.36, selling is coming in. So I want to see if it holds, or let the wave complete, and it'll tip me off about whether a pullback is in play or not. Same thing here with euro. It has a chance to rally right now, right here, as it broke this low 1.026 and went to 1.024. It has a chance to rally. Buyers have to defend. This is the last place to defend after it's breaking through. So is it going to break through? Yes or no? Next is natural gas. We have a rally, pullback at 3.134. Trend is up. Support at 3.134. And that's about it. All right, everybody. So we're gonna start reviewing the markets and see what opportunities are available. Before we do that, let's just quickly go over a quick lesson. And the lesson has to do with execution. In particular, I'm going to go over targets. Right? So when you consider trading, it's basically the execution process. You have to define entry, should be stop, entry, then break even, then target, and T1. If you T1 and T2, usually you have one or two targets, and how to move the stop after. Right? So this is basic. This is it. So in your trading plan, you should have this mentioned. All right? And this is just from the execution. All right? So this is after you get a setup or signal or whatever, right? What you need to do is stop, entry, break even, move, moving the stop or to lock in profits, and then target, typically T1 and T2. Why you want two targets is because a lot of times the market will move in your favor almost to your target and then totally reverse and come back. So what people do to deal with this situation is to scale out. And you scale out half your position, or at least a third. Typically two targets, sometimes they're three targets. But typically at least two targets. So we'll cover the target section here. All right. Now in Wyckoff, the way he does targets, there are a couple of ways. In the first course, he does it based on cause and effect. He does it based on cause and effect to a price objective. So cause and effect is nothing more than accumulation and markup. So accumulation along support lines and generating a target from that. But if you see what he said about targets, it's not just that. In the day trading, in the context of day trading, he had mentioned some other things. You know, if the market, for example, accelerates in a very strong move, he would take profits and get out. There's also, if the market is shortening the thrust, there's also an idea about getting out, right? So, but how do you define a target? All right, so let's get into that in a very easy way, very easy way. All right, so the first thing is you have to have, for example, a rally telling you to, you know, that you want to go in and buy and go long. So the target here is based off of a cycle. You have 2 data points that create distance from low to high. You can use that cycle low to high to project. All right, that projection is very similar to the pullback, meaning a normal pullback is about 50% or 61.8%. Right? That's pretty normal. 50% is very normal. Most markets, you know, in Wyckoff, it's called halfway back. So instead of halfway back, you look at halfway forward, and that could be your first target. Some folks will take a 61.8 extension instead of like a halfway forward. They'll take 61.8, and then the second target can be 100%. So it's like halfway forward. %100% extension. Okay, so it's really that straightforward. And if you add this up, it will equal 2.5 R. All right, because assuming that you're getting in around 50% retracement or slightly below it, halfway forward would be 1 R, 2 R, 2 R, and then a third R would be the 100%. So if you add that up, it's 2R plus 3R divided by 2 is 2.5 R, right? So that is something you can use. Now you might be thinking, oh, you know, that's okay, but is there something better? And there is something better. Obviously, we're not just shooting for 2.5 R. This is 2.5 R of a higher time frame. So the idea here is you're using a lower time frame entry. The lower time frame entry would mean that this is much greater, because you're using a lower time frame for entering and a higher time frame 2.5 R target. So that lower time frame entry risk is very small relative to the reward. The 2.5 R is only valid if you're considering the same time frame, not if you're considering the risk to be on a lower time frame, and at which point this is negligible, because the R is so much smaller. I mean, the risk is so much smaller and the target is quite large. So I'll just show you guys how it's done. Now I'm not going into the entry, I'm just showing you like how easy it is. Alright, so let's say you're using you just draw point A, point B, bang, done. And this would be on your higher time frame if you're using, for example, an hourly or 4 hour. 4 hour is very strong, or daily, right? So A to B, done. What's the first target right here? What's the second target right here? Done. Done, done, done. All right. Now, as it comes back down to around the 50% entry, we go into a low time frame to seek the entry. All right, and this would be a higher time frame. That's the 50% extension. That's the 100% extension. Again, though, typically the first extension takes, I have it here as 50, but typically it goes to at least 61.8. I don't know why, but I've seen too many times. It will exceed the 50% and go to 61.8, or you know, that fib number, and or it will go to the 100% extension. That's what happens. I don't know why, but it's based directly on this data, meaning you have a low and a high and distance, and you are projecting based on that, based on actual data values and not imagination. So A to B, and then breaks out and get out here and there, just projecting it, right? So this is pretty straightforward and a very nice way of taking profit. And all you have to do is just, you know, click. Whereas the other approach, you know, intraday, the Wyckoff point and figure approach, this is usually I would use it for a trend target, right? I might have to modify it for a stepping stone target, right? But you could use either approach. You could use the Wyckoff approach or this approach. This is actually much simpler. You don't have to count. You don't have to do anything else. You don't need another type of chart. And many of y'all, the charts may not even be valid. The construction of the point and figure on platforms is not valid. They don't have the one box reversal, for example. And anyway, so now you know how to do it. Just click, and you get your extension 1 and 2. You know, you have your retracement here for 50% with just a click and a click. You get your retracement and both extensions. Done. Nothing else. Right? And now the whole trade becomes framed. Now when do you do this? As soon as you get a rally. As soon as you get a rally, just click, and you're ready. You know, you're ready, and now you just have to be patient for the low time frame entry. All right, so we covered targets. All right, I'm done. All right, with that, now let's take a look at applying some of that to these daily charts. So you'll see how I apply it. So we'll just go here. And this market is in a downtrend, the ES, so just draw from high to low. We see price already pulled back to the 50%, and what did I do? I don't know why it's not drawing right. I don't know what just happened. Just draw the high to low. Yeah. For some reason, it's just not working right now. I don't know why. What just happened? So let's just skip this. We'll go to the next one. Sometimes, you know, You might have to restart, or I don't know what happened. All right, so just go here, target low to the high, and we have the first target being tagged right now, or almost, and the second target would be 82.16. All right, so that's it. You just draw a quick click. You get the pullback, retracement, and the extension. Right, the pullback is really important. The 50% line is really important. I prefer to look for trades after they crack that 50% line, because that's when I see buying usually come in. And the extension is based off of the prior low and high. So anyway, so let's just quickly go over these markets. So ES downtrend, you had your rally down, and you had your pullback. Refresh this. Oh, now it's working. All right, now let's try. Now I just had to refresh. Okay, there you go. All right, so this is your rally. This is the biggest in 12 waves. You hit the first pullback, hit the second pullback. If the market does not respond here right now, as it broke the 58.66 low, look at the response. This is a garbage response. There's no response here, right? So this means it's a pullback. So unless that market comes with the ability to rally, looking for 57.08 minimum, 57.08, and then 55.50. All right, let's move on to the next market here. I already covered crude, 78.73 and 82.16. Next would be gold, but gold, the volume keeps coming in. So it's about to make if it makes a high here, it would actually be projecting higher prices. You see the volume, this high got taken right here. So what does that mean? That means this is going to make volume is making a high. If you believe in the theory the volume precedes price, it would mean that gold is going to make a higher high. It's going to take out the high, because volume already did it, and volume precedes or leads price. Right here, right there, volume did it. Okay. So this thing is ready to go. All right. Bitcoin. All right. Let's delete this one and that one. Right. So this is the rally. We'll project a target based on the rally low and high. First, the pullback. The trend is up. This is the rally. Pullback. The 50% retracement is 84,635. And if it doesn't go now, I'm looking for it to come back down to that level. And where's the pressure underneath it? Let's see. The buying pressure underneath it is 78,103. 78,103. Let's 1 second. Oh, daily chart. So yeah, 70. I'm switching a little bit. 76,501. If we consider all the intraday data, it would be 76,501. And I don't know if it's going to go there, and I don't know what's going to happen, but it needs to rally from here. If it doesn't, it's going to pull back to it can pull back to this area right here. This is a demand area. This distribution right here, the demand area. All right, so what am I saying? ES, looking for it to go lower. If it doesn't rally from here, if there isn't a strong response, you can check that response here on the hourly. and the crude is strong, very strong, very strong. Right, so tag this here, tag this area, and rallied. Okay. All right, that's all, folks. Have a good day. Bye.